Good afternoon, everyone. Welcome to Tuesday, November 25th, 2025 edition of Trading Trends. Stock edition. I want to get one more video in before the holiday. We'll not be able to do one tomorrow or the rest of the week, so I'll be back very likely on Monday. So happy Thanksgiving to everyone in advance. If you like what we're doing here, subscribe. The idea is to explain concepts and discover some ideas. And I like doing on airing my process on the air. So let's get to today. Without further ado, let's just get right into it. Hope everyone has a wonderful holiday. The markets are trying to do their part. Where is the doc? Okay, here we go. Oh, just just to begin here, we had our conversation on Spaces today. If you joined us, that was a great conversation. Some bears, some bullish. If it comes down to time frame, but it was a good conversation. Lots of interesting things happening in the marketplace. Let us get into it here. All right, so Abercrombie and Fitch, a massive day. Retail really exploded today. That's going to be a focus of the video. Always like to see that if the markets are concerned about recession, pullback, unemployment spiking, etc. Zoom has zoomed to 52-week highs today. Remember that company back from the good old COVID days, or not so good. And Lennar, home builders, really dug in where they had to. The bulls stepped in, and that stock went higher. We'll take a look. And AMD and NVDA dropped. So you're getting all-time highs with Google, Apple, Broadcom, Johnson & Johnson, General Motors, AstraZeneca, TJ Maxx, and you're still getting AMD and NVIDIA down, not 1, not 2, but 3%. In a way, you like to see it. That really is rotation. So we were talking about this and writing about this yesterday. So without further ado, let's get into it. Let's get right into the dashboard panel, shall we? Here we go. Boop, bop. All right. So NVIDIA, like I said, aforementioned, down 2.5% today. There's a lot of green on the screen here, but NVIDIA and AMD down multiple percent. AMD down 4%. Google up 1.5% as they just continue to just dominate. The market loves their AI strategy. That's what happens when you think search is going to get eliminated and they're losing their stronghold just about 6 months ago. And now it looks like they're going to absolutely dominate with Gemini 3, and the market is rewarding it trillions of dollars in market cap really since the spring. Meta up 4%. Wow, talk about rotation. That stock has been in the dumps. Broadcom up 2% to an all-time high. Small caps is where the party was at today, up 2.25% basically. Amazon up 1.5%, has not done much on the year, but it adds 1.5% today. Oracle down 1.5%. That's going to continue to be a story. I have kind of corresponding levels in my head. For me, it's NVIDIA 190, Bitcoin 90K, Ethereum 3,000, Oracle about above 205. I want to see those levels. They're all pretty much corresponding with each other. If we're above those levels, risk on Santa come early or, right on time, essentially, although the Santa Claus rally starts on Christmas Eve. And if we're below those levels, I still think the bears, I don't want to say they have control, but there is a little bit of hesitancy in the market. You'll see what I mean when we get into the single issues. BABA down 2.33%, and that's about it. So that's enough of that. The dashboard panel. Let's get into the day intraday volume and candles here. So the bears thought they had control very early on. Literally at 9:30, they sunk the market to about 664, and again at 10 a.m. they sunk it to about 666, and the bulls really stepped in. We were above VWAP since then, since that 10:30 bar. As you can see here, only got more fuel to the fire at 11:30. We had a breakout above the prior day's range, the prior day's high, as well as entering an overbought registration here, and it works on multiple time frames, of course. So if it works, breakouts on a 20-day, it works on these bars too, each one constituting 30 minutes, and that's truly where it hit a crescendo at 3:30 p.m. at 676 in SPY, and then a small sell-off, but still holding VWAP, which was 672. As I zoom out here, again, so for me, and I was talking about this a bunch on Spaces, key critical level today, and especially the afternoon, was absolutely massive because of where the markets were, and especially the underpinnings of it. Home builders will look at one in Lennar, also just a lot of risk assets. So I want to see where the financials would bounce off of this level. Small caps as well. Small caps led out of this area. Their short-term moving averages are already curling up here, and they're holding the 20-day. For SPY, my level, very, very important, was 670. We are above it by $5 today, thanks to this rally. As far as I can tell here, it looks like we should be headed to about right around, 694, 95. It should be north of an all-time high that we did strike on October 29th. We should go through that. And I have it right now for Fed week, literally either the day before the Fed, December the 9th, or December the 10th, possibly, into the cut of 25 basis points, which is now 85% expected in the market. Or possibly, in the presser when Powell speaks and you get that zig and then a zag. If we don't get the cut and the market is upset and gets a temper tantrum, I fully expect we could drop to 6,200 over the next couple of weeks. So it's not up and away. But right now, depending on where we held both times here, with that nasty bearish engulfing on the 10th, we held at 650. And then again, 2 days, the Bears have two chances for the rug pull here on the 20th and the 21st, 650. And now, voila, immediately 675, and the technicals are starting to make sense again. So for me, it looks like we're having a bullish accumulation phase that has begun, about 2 days ago, and it looks like it's going to reach a crescendo during that Fed week at right around 695 or new all-time highs. That's about it for that. Again, like I said, a 670 corroborated, correspond exactly with that 670, with the 50 RSI as well. Like to see that closing above the higher part of its range, then lower, likely leads to more buying pressure than selling. Let's get into some single stock issues before we start thinking about stuffing and mashed potatoes and the Eagles beating the Bears on Friday. All right, number one, we'll go multiple standard deviation movers, and my goodness gracious, Abercrombie & Fitch, look at this. This is a big stock for me about like 2 years ago. They were doing a lot of things in the company. It took over the portfolio. It was a massive mover. And now in the past 1 year, this thing has been a dog. It truly peaked at the beginning of the year at 165, and it really fell out of bed a week later, and it has not visited the 200 moving average until today. It is above 70 RSI today for the first time all year. I thought it was going to hit a wall there. That 200 day is $83, and woof, it surged right past it to $90. So an absolute machine. It's a $3 billion company on $5 billion revenue, so you got to like the valuation there. So for me, I'm guessing they cured cancer, obviously. No, they had earnings today, and it looks like they absolutely crushed it. But this was at, very near lows, 52-week low, very close to lows, $66 yesterday, now up to a 90. When things go parabolic, usually doesn't end well. But this is, I want to, give this time to have the dust settle. Again, this has not been above 50 RSI since early September was the last time folks were even sniffing about being bullish, Abercrombie & Fitch, and here we are. Just highlighting it because there's some retail moves that really ripped the market up today. That's Abercrombie & Fitch. Just highlighting it because it's a big mover. Next, Zoom. New 52-week highs for Zoom. Let's see if this is something tradable. So here's 200-day moving average, a brick wall here at 78.5. It hasn't even budged really since the last earnings report. They reported last night. And look at that, from 200-day moving average to 52-week highs, but a clean rejection there. Someone bought 91s and then ended up closing 86.5, just a hair above VWAP. Zoom haven't really, seen this trading too much lately, kind of almost dead money, but a big 10% day. It's a $25 billion company now. If you get some zigs and zags, some consolidation in the next couple of days, say closer to an $82, I think that is a good entry for a full target of about $88. But I don't like chasing it up here. This 200-day moving average will start to curl a little bit, but you want to see it hold those levels that we were just speaking about. $82 is a good entry. You might get it. That was a really huge Dikembe off of the $91 level. And then, but I do think this 78.5 is safe. So an entry there, if you get it, it would be good. That's it for Zoom. Next, we're talking about the home builders. What a beautiful move. Lennar, one of the poster children for today, up 6.5%. Look at this, similar to what I just said. This peaked last November at $177 and has tried to etch a recovery starting in mid-August. And I do that based on registering overbought registration and coinciding with a close above the 200-day moving average. And still, it's contending with it, and now it's trying to finally. It's still the 200-day moving average just started to go up for about 3 cents a day. 118 is your support. It's had a huge pop here all the way to from the lower Bollinger Band to the top in just 3 sessions. Again, similar to what I said for the other name, its home builders are still a bit of a volatile group, but the market seems to be sniffing out the certainty that we're getting a 25 basis point cut in about 2 weeks. For me, full evaluation is 131 on this. I think there's a chance you get a move down to possibly. The candle today looks great that they were upset the bell rang, essentially, but because they wanted to just keep buying here. Clear overhead at 143, but for me, fully targeted right here at 131. If you get a reversal small to about 125, I think that would be a good level to participate back to this level of 131. And pretty much just long stock. Some of these are parabolic and just coming out of basing ranges. But overall, you get a 25 basis point cut. This is going to start to go higher, and the next level 142, and then before you know it, 175-ish in months. All right, let's look at the losers and some that many people own. AMD, a massive loser today, down 4%, is not nothing. AMD, no real news, just a little bit of a rotation out of some semiconductors. So these candles are not super strong. Very appetizing here, but I do like that we're holding 193. What I'm interested in is does this fill like Oracle? Does the gap get filled? And do we go all the way down to 185 or even worse than that to truly fill the gap 170? I don't think so. I like that it's holding, albeit by the skin of its teeth, but I like that it's holding this 200 level. Here's where 200 where my cursor is, and then the bottom wicks, you see they reject it and they do buy it off that 195. So there really is where the support is. But I think this has a nice 2 weeks to about the 230 level, but life comes at you fast. I was writing 2 weeks ago that I liked entries on AMD under 230, and now we're saying that the move will just get to 230. And I don't think all-time highs, will be hit above October 29th. So some things get updated and modified, some don't, depending on the playbook that's been given. But again, this is due to it being out of at least 50 RSI for the past week. Really, really ugly candles. Still overall bullish tape. Like I said, a rally to 230 is still very decent. That's a $24 move from here, or about 10% for AMD. Again, half of the losses basically today, 4%. But I do think that happens, and then the road will get a little bit tougher for it, right around $230. But that was AMD down 4%. Let's look at IPG. This is a media company. This one got pummeled for its ATR, average true range. This is a pretty big move for it, down 2.5%. Big volume on it, or decent sized volume on it today. Yep, $10 billion media company. Down 2.5%. This thing was a star last December at $33. Has been in hell. I say that by the 200-day moving average, a nice rotation. Also in August, like the aforementioned name we had said. And now the 200-day moving average is still going down by about a penny a day. And that's where it's gotten to just today, the 200-day moving average. So that is it for IPG. I think this today is the beginning of the move down for. I don't like this name. If you're looking for shorts, this looks like not a bad one, although I do, like I said, the market overall is going higher, I believe, in 2 weeks. So I don't want to stare for shorts. But if you need something to fit, this looks like crap. Also, look at it just for a second. It got above the 50 RSI and then went right lower. The 200-day moving average looks heavy. This looks like it's wants to go, not a huge plunge, but about 24 even, I think is where this wants to head. So that would be a reduction of about $1 or 4% in the next 2 weeks. Not a bad looking short here, IPG. Next, for the movers lower, I believe company we all have heard of, NVDA, down 2.5%. Kind of a different chart from AMD. Whoops, let me move that box here. So again, Google all-time highs, Broadcom all-time highs, of course Johnson & Johnson and other firms as well. And NVIDIA, the star player is down 2.5%. Is that okay? I think so. Here's the thing, good and bad news about NVIDIA. I think it has a decent 2 weeks, but I'm not going for all-time highs anytime soon. I think this is going to go to about 190, and that's where things are going to get a little bit sticky. So that's about, we closed at 178, so you got about $12 or so. I think it'll get that, but these highs still look, especially with what Google is accomplishing with their own chips potentially, and the share, I'm not so sure NVIDIA has 212 plus in the cards in the short term. I do think it has a good 2 weeks to about that 188 marker. That's NVIDIA. I think you're probably okay to sell the 170 puts. Might take a look at those for tomorrow. But again, those lows are holding back from mid to late September. So not a great looking short chart in the short term for the past month, but I don't think the top is in NVIDIA. All right, top 3 gainers of the past 5 days. Number 1 stock in the market, and there's been some crazy movers, but I really want to keep to the quality of the filters, which is basically $20 a share price and at least 10 million shares average daily volume in the past 20 days. Kohl's is up 42% today. I told you it was a retail explosion. They have cured cancer as well. It's an IL-6. Massive day. I don't even know what you say. This has happened before in Kohl's. I had an up 38% day in July. And then today, an up massive, just massive 42%. I mean, the stock was a $1 billion company yesterday on 16 billion revenue. So just absolutely crazy. And that's why they flocked to it. What can you say about this? My upper range, I was bullish to name, really has etched a nice recovery since late July. And the 200 days down here at 1170. And here we are at a 2x, a little bit extended, overbought, exactly the same conditions as you had in July. More volume then. I don't want to chase this above 19 right here. It looks like this is, try trading to a buyout or something, but this is just a crazy looking chart. 42% Kohl's. We'll see what Black Friday numbers look like. All right, number 2, and this is good to see, CIFR mining. This is on my short list, but I'm still relaxing a little bit on the Momo or momentum trade, but this is on my list. This has been one of the biggest poster children for momentum of the past several months. I'm talking about CIFR mining in the software space, data centers out of New York, actually. Discovered, and they're $6 billion on 200 million revenue. Today at 5%, we're talking about it because this stock had an amazing run from April, literally a $2 stock, and then all the way to November, just a couple of weeks ago, this soared to $25. The 200 moving average is back here about $7. We are above 50 RSI for the first time since the week of its 52-week highs. So that gives me warm fuzzies. We're already at the 21-day exponential moving average. So that is a good sign. I think it has a good 2 weeks. I might really have to consider this. I think this is worth it. This looks like to me that this wants to get to $24. I'm going to really restore putting this back on my list. This is like it wants to move to $24 over the next 2-ish weeks. It's a huge move, but this has more momentum, say, versus the other momentum trades like Rigetti, which is still in the crapper. OKLO, we'll look at that to the bottom, to the downside. But this CIFR looks like it is really, really looking strong. Look at the hold as well here at $13, which has been holding since the beginning of October. And that's a crazy fall from $25 to $12, a 50% reduction, and then boom, right back up. So have to look at the option chain and things like that. This is crazy volatility, so you could probably just get long shares. Otherwise, I don't have to see what's the options liquidity, but maybe February 24 call, something like that. I'd have to look, but this looks like it could be setting up for a buy Wednesday morning, $24 target for that mid-December. And it's the second best stock after those second best performing stock this past 5 days, up at 19%, only second after Kohl's. And then another one with momentum, of course, is Rocket. RKT, Rocket Companies, up 8.5%, up 17% in the past 5 days. This is a, for those not familiar with financial services, personal finance company. This one personally right here, great looking, live too much outside the upper Bollinger Band. This thing's gone from 16 to basically 20 in a hurry. Highs back here on 9/11 at 22.5. For me, fully target right here is about 19 quarter. So I don't want to chase it. Like I said, they closed this one pretty high to the highs of the day. And there's resistance at 20. I want to chase this here. Something tells me you might be able to get an opportunity for this around 17.5 in about 2-ish weeks. So, but that, like I said, so sometimes it sets up like a CIFR. Sometimes they don't want to Rocket, but Rocket, the third best looking name this past 5 days of an average of about 3% a day. Let's look at the losers. Number one loser, it has not been a fun week for Michael Saylor. The worst stock in the market, I'm sorry, Michael, is MicroStrategy or just Strategy. Might have to get a new strategy. It is down 18% or an average of 4% a day. This thing hit 52-week lows yesterday. That sum is 166 today. It moved to 172. You can see the tape down 3.8%. This thing's just, you can see the chart here. We know Bitcoin peaked in October. This thing had a kiss of death here, almost above the 200-day, and then hasn't seen it since. So unfortunate. But this thing was basically I'll say a star up until mid-August, and then you gave it the benefit of the doubt until early October, and then really no reason to be in this name, especially after the breakdown under 300. So for right now, going forward, I think you get a dead cat bounce. This does not look good, especially given the state of risk and Bitcoin itself. But yeah, I think this bounces to about 215 to 220 over the next 2-3 weeks, but I am not betting on it. And this thing's been oversold, by the way, so they really don't like it. The accounting practices, the non-inclusion to the S&P, it's just a lot of not great sentiment in this for about 2 weeks now. This thing's been oversold, so not a new story, and it's still the worst stock in the past week. Number two, then we're talking about momentum. OKLO, not so great, down 12% over the past 5 days. I'm long Rigetti, very similar in the computing space. These names have been absolutely pummeled. This one, again, it's a good sign if it's holding that 78. That's the area of the former breakout. Those are the August highs, or the that mid-September level that we're seeing here before it entered this overbought area. 200-day moving average is at 68. Don't forget, this thing peaked in October 15th at $194. So you're talking about 50% haircut. Meanwhile, the S&P is obviously 3% away from all-time highs. So you really have to get under the hood and look at the markets. I think this has a decent 2 weeks, but it's not to all-time highs. This is on your top 5 list of stocks of the year. The problem is, I think in the next 2 weeks, this is probably going to get you to about 105 to 110. That's a huge move. It's trading at 85 today. The thing is, I think from there, it's going to start to go sideways. I don't think it has another gasp of energy and goes higher. Even with the market, I foresee going to all-time highs. I'm not so sure this just leapfrogs and goes to 140 again. So could it get to 105? Yeah, and that's a huge $20 move. I think it can do it. But after that, not so. All right, then lastly, we will close with ORCL, also pronounced Oracle Corp, down 12%. And the CDS is a big story. This is a big story. It is now, again, remember this huge day that took it to high, September 10th, up 36% with the OpenAI deal. And now really, really hitting the problems here. Just looking at this chart here. Right. Things happened for the 20th. It was oversold before, but still above the 200 moving average. But that was your sign that folks wanted to exit. And now crazy things are happening for Oracle. We're under the 200-day moving average, was at 211. Yet a nice looking hammer or dojo, I will say today. I will see if it holds. But we're still ugly oversold. This company hasn't even been over 50 RSI since October 17th. I look at Oracle price every day. I think it's important. It's an important like delevering understanding of the iTrade where folks think it may not work outside of the hyperscaler. So I don't like this chart. This was look at the sell off a tad. Okay, down to 209 from that level here from 285, and the most it could do was 211 to 230 and right back down again. So I think this one in the penalty box. I don't like it, and I just feel bad for you if you do not take profits up here. I feel extra bad for those that bought 345s in September because it's a lot cheaper today. All right, if you were long Coles, long CIFR, and short MicroStrategy, congratulations. You are absolutely crushing the stock market. Those are the 3 best trades of the past 5 days. We have a happy Thanksgiving and be thankful for you. Tune in. Peace.